This works. It's insane. The time is currently 8:24. We're reviewing price action, and although we're not fully out of this trade because this area of rejection here at the take profit area hasn't quite been tapped yet, we're not fully out of this position. We came very close to it, but we haven't quite gotten an exit out of price action. Since I've put my stop loss there, that means I have to wait until I'm actually fully executed. I would not have closed out full my position. So first things first, the 4-point checklist today has been great, right? We used it to depict a little bit more of the daily time frame because we didn't really know too much about what the daily narrative was until we had 4-hour time frame closures. When we put out these ranges, we don't have too much historical data to the left of my screen, right? We know this. When we were looking at the daily, we were looking at the 4-hour. I was looking to see, right, well, where can I actually get some proper levels to better understand what ranges are we playing, the current range that we're trading, and how is price action gonna move. Firstly, I thought about buys, and then I realized very quickly that buys wouldn't really make sense because levels weren't being too respected at that given point. So then we changed it up. We updated the lines again to this, and we started to see that it actually made a lot more sense. Price action came down from yesterday. You traded, you found the resistance. So then now you're looking at the higher time frames and you're saying, right, well, price action from yesterday has had a very, very big retracement. That's completely fine. Nothing wrong with it. Now, what minimum for me to have in terms of a position is if you want buys, you're going to wait for price to start pushing you up. So we have to identify ranges to the left. And even if we don't get buys and you get sells, you still need a resistance level, which you have. So this is the current range that you're currently trading in. We've seen it from prior historical data. Price action taps these areas before. It wasn't too accurate on the one, but it was more accurate based off of the 4-hour and the daily time frame. The daily was pretty much the biggest playing factor in terms of developing bias. And this is what today's trade would have looked like. I understood that if you look at the higher time frame, you look at the 1 and the 4, typically, if this is considered bearish structure, look, you've got a very big push to the bearish side. Price action is now just slowly trickling up. This is typical retracement behavior of price action. So if we now know that we have a current range, we have to find out liquidity areas. Now, it was hard for me to find liquidity areas on the downside from this area because we don't have prior historical data in this left of the screen that said this is the only thing we have right within the range. So there's no historical data to copy to know if price action's reaction here will actually come down. So I have to use intuition. We know that typically price drives from this area. We know that, and it will typically come up towards 4405. But what I did was reverse engineer. You look at what price action is doing. You've got clean traffic down, price action starting to trickle. So you're probably going to do the same thing. If price actions come up, you're looking at a rejection. If you don't have some form of confirmation to tell me that price is reversing, use your range too. So we've ticked off mark out current range, we've ticked off liquidity areas, we've now technically ticked off what price is mirroring because we're using prior historical data to tell us these ranges, and we're building the narrative across the time frames. We saw the 4-hour, we saw the 1-hour, we saw the 30-minute, and to get into this position was actually based off of the lower time frames, because what we started to see was, and I realized this too late on my original entry, price action here has a range. This is a range. So you've got given the first range, you've come down, you've grabbed an advantage point, and now price action retests your original area, well, not original area, but your range 2 area now of the next range below. You're looking to execute a trade position here. Price action puts you stop loss to break even at around 100 pips. I mentioned this in the live trading session. 129 pips. Price action pushes down. Now, had I missed this, which I did, I said to myself, right, that's fine. We'll look for a re-entry model. Now, for me, I thought this would be the retest. You didn't quite get the wick because it didn't technically validate you. And I thought that was it. But no, I was completely wrong because price action came up to validate this exact level at 43.78. So you got the closure here. You're looking at maybe a top wick entry. If that was a top wick entry, that would have been absolutely sublime. Price action comes down. So your entry is in this area. You wouldn't go stop loss to break even in this trade until this area here. Matter of fact, was it the 5 time frame I was looking at? Price action validates you into the market. I'm not going stop loss to break even until these areas to the left of my screen, either 50 or 56. 60 or 56 is my advantage zone. So price action would have come back to break even. You'd still not have risk off the table. Your stop loss is below the highs of the previous range, which is up here, 393. That puts you at about 150 pip stops. Price action pushes down. You're going advantage zone, peaked at 220 pips, and your full TP is at a 418, which you're currently not yet out of this position. So there you go. There's the breakdown. We realized that the first entry position was too late. Actually, we were just late by maybe a couple of seconds because I didn't see that range. Again, it was the preparation and the experience. If I know how to illustrate and I know how to plan it, then actually I would have identified it sooner. Therefore, I would have actually prepared for the position on time. And the re-entry model that I suggested, which is this retest here, it wasn't too late. I just got to trust my levels for range 2 retests because I actually would have gotten validated at that 5 p.m. candle. So I was wrong. It wasn't that 320. I shouldn't have just said, yeah, whatever, it's not right. Price action came back up. I know that in the spur of the moment, I'm thinking, oh, price actions actually grab liquidity, you're pushing up. This could be coming back up, but trust your levels. If you never got validated in this area before and you look on the higher time frame, this is actually technically still bearish retracement for price action to come down. I only see it now because price action has done it. So this is going to be quite exciting. If I go Saturday, Sunday recap, we're doing a backtest session and we review this whole trade again, where, you know, we cut off price action at a given area. Can we identify the same thing? Are we going to be correct with the same analysis? To summarize the post-trade session evaluation, although we haven't got a result out of the trade yet, so when we do, I'll stick it in the end. The 4-point checklist that I have, it works. It was tougher to use today because there isn't much prior historical data on the screen for me to actually base levels off of, or rather not levels, but mirroring of price action. But if there is no entry based off of price mirroring at a resistance, and pair that strategy with the range 2 retest, because as you would have seen today, it would have worked out not once but twice. Your original entry model for the range 2 would have worked, your re-entry model would have worked, and it's again piecing the puzzles together. Every single session I'm telling myself this because it is really piecing the puzzles together. Throughout my years of trading, my 2 years coming to 3 years of trading, or sorry, starting my 3rd year of trading, I am now seeing how much time I've been wasting because I've gone from this strategy, then it doesn't work, then I start again. And then I'm trying to piece together a new strategy, doesn't work, start again. Whereas actually now going into 3rd year, I start seeing, right, well, I've built this X skill set of range 2 breakouts. And then half a year later, I've now built a re-entry model because I've realized my observations of if I've missed the first entry, technically you can still get into the second entry to come down to your same TP. And actually the re-entry model can cut your stops in half because your risk is lower. Technically, I can go into another deep dive of that again if I need to. And then now I'm pairing it with this 4-point checklist that I've just created and we're trying to develop it. So if you piece everything together, you're actually getting one really good tailored strategy that will work in pretty much any market condition. And I'm only saying that now, I don't have a lot of experience with it, but I have a feeling it will work if I keep sticking to building this puzzle. That's a wrap, and I'll come back for the trade outcome when we do get one. Otherwise, yeah, this would be either a break-even trade. I haven't considered utilizing trailing stops just yet, so I haven't secured anything. We're just risk-free off of the trade position for both of the entries. So my original entry, had I taken that, this would still be a stop loss to break even. And if I had the re-entry model, this again, still stop loss to break even with nothing secured just yet. Right, to make it easier on myself as well, I've written out here the skill sets used for today's opportunity. I think it summarizes everything really well so I can remember how I've utilized my skill sets and to remember how I can piece together to utilize it to get this entry and make it possible. So the skill sets used for today's opportunity, 4-point checklist has been used. That's determining the actual area that I'm using. The higher time frame price structure. I haven't touched on this before because I thought it was self-explanatory, but I'll put it in because it's value to me. Higher time frame price structure, because what we did was determine a bearish market from recent free fall, which is how steep price is, which I can just show you is this area here. We just zoom out, you'll see you're very much in bearish structure. So you're very, very steep to push down, maybe like well, this is basically 90, but let's say almost an 80-degree angle. And then price action starts coming up more so like a 45-degree angle. When price action starts doing this, you're already trying to anticipate, you're already kind of anticipating price action is ready to kind of reverse. So now you've determined price structure and you know that you're going to get an entry somewhere soon. Only now do I look at a range 2 model, and the range 2 model is utilized for my entry. So your step 1 is identify your ranges through the 4-point checklist and understanding where roughly your entries are going to be. The second part was to look at the bearish form of of momentum, and you know that you're in a bearish market because it's very steep, comes shallow. So as this means shallower means more like a retracement of price action rather than a pullback or a reversal. If it's a reversal, you'll tend to see more of a steep push up and then the retest down to create a support to then start pushing you up. Whereas here you can see price action is very steep, shallow recovery to then continue the path down. Either way, at this area, we already know that price action should come back down towards the 337, 336 areas minimum, right? Price action, if it refuses to push up, you're knowing that price action is most likely going to re-challenge these lows to either break and continue or give you a retest to form a support to then push you back up into the range at 404, let's say tomorrow. There you have it. Straightforward. 3 pieces of skill sets that we've put in today, and 2 of which we've recently developed. And then the new one, which is the higher time frame price structure, determining based on how steep and shallow price action is something that I just learned from Neo Young. It literally is that. I've spent so long on the charts looking at how to actually understand price action, and it was actually just that simple. Sometimes listening and gaining a little bit of advice or obtaining some form of information from other experienced traders, fucking wonderful. All right, it's the last check-in. Price action smack TP. Absolutely fantastic. This is exactly what I want. It's been placed into... For myself, it's episode 131. For the post-trade session evaluation, that's literally all you get to see is this entire trade. Sunday recap's going to be posted, I think it's the 4th of January. So for sure, Tuesday's trade position, bro, this is insane. 551 pips on the clock. Yep, 551 pip win. Risk 151. Risk to reward 300. Sorry, not 300. A 1 to 3.65 risk to reward ratio. And that's that. Just going to piece the puzzle together and let the consistency keep coming.